What's up, guys? It's Harry Haas here, and today I'm going to be going over two trades that I made last week that were pretty much identical using the exact same pattern. And both of these stocks were not hot chicks. Both of these stocks were stocks that just kind of gapped up in the pre-market, and there wasn't really a lot going on with them until they got a kind of strong opening push, and then they kept going and ended up turning into kind of big runners. So I'm going to be just going over those two kind of trades. As always, I'm not a licensed financial advisor. Anything I say in this video, it's not financial advice. It's purely for entertainment, educational purposes, and that is about it. So yeah, let's get into the video. So the criteria for this one is number one, it's not going to be the hot chick of the day. Very rarely will you see a hot chick of the day do things like this. And the reason being is because a hot chick is usually something that's up, 100, sometimes up over 300% in a market like this. So obviously, this pattern is not going to work with that. And what we're kind of looking for, as I just kind of explained, is that we're looking for kind of a strong opening push in the first few minutes of the day. And then after that, we're kind of looking for a few minutes of consolidation. Now, this can be 2 minutes, this can be 4 minutes, this can be sometimes 8 minutes. But the point is that we're trying to be patient and let the stock show us that it does not want to go lower. And we're kind of looking for some consolidation. In both these scenarios, it was above VWAP. And we're just letting the stock show us that clearly it does not want to break down. Also, when we're entering the consolidation, we're looking just to be risking below that consolidation period, because if we risk any more, then we're just going to be taking on unnecessary risk. And most likely you will be over the pre-market high. So it's good to have daily lines ready if you're looking to kind of play an idea like this. It's good to have kind of stuff ready. I actually went and kind of back tested this pattern a little bit on some previous runners, and it's actually one that works pretty well. Both of these stocks, as I already mentioned, were not really the hot chick of the day. There were other things gapping up. There were things that people cared a lot more about, but I think it's good to kind of make a watch list of other stocks that are also not the hot chick of the day, if that makes any sense. I try and make a plan on 2 to 3 stocks in the morning. I mean, you're going to have stocks that are very easy to borrow, have things like SSR on that are still doing a little bit of volume, but people aren't necessarily paying attention to it yet. And then all of a sudden, when the stock starts moving higher, a lot of people like to try and get involved with the stock and like to trade it or buy it on dips, to try and be, early or whatever out of FOMO because they missed a move on another one. And all of a sudden we have 2 hot chicks in the morning instead of 1. And what usually happens is that the stock that is usually or was the hot chick in the morning, usually it kind of steals a little bit of volume away from that kind of morning hot chick, and then the volume starts to transition into the new one. So it's kind of the money starts to come out of the old hot chick, and the old hot chick starts to kind of fade, and this new one that now we're looking at now, the money starts to kind of pump into that as well. So I just thought that I'd draw it out as well, because some people really like a visual, even though I'm going to be showing you the 2 charts that I traded on. I know that a lot of people really do like a visual, so I just thought that I would go ahead and make one. And basically, we kind of have a pattern similar to this, where we have a stock kind of, gap up in the morning, maybe 20, 30%. Not really a big gap up, not really something that people are buying, paying attention to. Usually it has 50 to 100K volume in the morning. Sometimes it has 500,000. I mean, it really depends. All I really care about is this kind of strong opening push in this consolidation. I mean, the volume back here, as long as it's kind of over 100K, I think we're good. I don't really have a set criteria. And for a lot of things, I don't really have a set criteria, because for a lot of stocks I traded, I found that I was kind of, putting myself into a hole where I would see stocks that were uptrending and they had like a 10 mil float, and I was like, oh, well, my criteria was I only long low float, so I'm going to be disciplined and not trade this. And after you kind of watch 3 or 4 stocks with higher floats start to move higher, you then start to say, okay, I'm just going to start trading this stuff line to line. I'm going to start trading this, based off of, the lines, and based off of pretty much that. And, you know, for me, I mean, this type of stuff, I'm not really a patterns trader. Like, the type of trader I am is like, a lot of people are like, oh, Harry, do you trade off the tape? I'm like, yes and no. Like, I'm really a whatever works type of trader. If this pattern is working in this market, then I'm going to look for it and I'm going to use it. But when this pattern stops working, then I'm just going to stop using this pattern. It's as simple as that. Instead, too many people get caught up in this, oh, I need to be only trading this pattern. Oh, I need to only be trading this float. Oh, I need to only be trading this criteria. I need to look for the holy grail. I need to look for the 100% win rate. I need to look for this type of stuff. And yes, our kind of human brain is always trying to look for that 100% win rate. I would rather trade this pattern 4 times and be wrong twice, cutting here, and I would rather be right the other 2 times and selling up here, because the risk reward is still great. And that's something that, I think when a lot of people get into the market and they start learning things, they want to try and find that 100% pattern. They want to try and find that, 100% holy grail. My system is going to be the best. My this is going to be that. But really, it comes down to one single thing, guys, and it's risk management, day in and day out. That's the holy grail. Live to trade another day. I kind of got on a rant there, but I think it's really important to talk about. This pattern may stop working in 6 months, right? I may never trade this pattern again. Maybe tomorrow this pattern stops working. That is okay. We need to be okay with things changing. We need to be okay with saying, okay, this may not work again. But the number one constant, the number one thing that will always stay around, and it has proven to stay around from years and years to come, is the resistance and support lines. Those are things that have been around for literal generations. So I just thought that I would throw that out there. I've been getting a lot of DMs on, different types of things that I don't even use. And it really comes down to whatever works for you. If something's working really well for you, then make it a part of your process. But if it stops working, don't be afraid to cut it out. I think a lot of people are just afraid of change. And I think, a lot of people are afraid of being wrong. And in the market, you have to be okay with being wrong. And when you're right, obviously you need to be right, but you just need to be okay with being wrong so you can be right in the future. Anyway, that was a little bit of a rant, but here we go. So basically, yeah, I went ahead and drew this diagram. Now what we have here is IDEX. I traded it on June 22nd. And we got exactly, as I kind of drew, where it kind of came down, but then we kind of got this strong opening push. And that really caught my attention because we started doing a lot of volume. But what caught my attention even more, see, I'm not a strength buyer. You're never ever going to see me buying up here. You're never going to see me buying. That's where I want to sell. I'm always selling into strength as a long trader. And as a short trader, you can kind of do the, shorting into a pop or shorting after a death candle. And then covering into weakness, because I think it's important to cover into weakness and then sell into strength or short into strength or whatever you want to do. So in this type of scenario, what we got was kind of this dip down, and then we got this strong opening push. And instead of just going and longing it right here, I said, okay, I'm going to be patient. I'm going to wait and I'm going to wait for the stock to show me what it wants to do. This is also a really big patient trade. Because, I could have had FOMO and tried to chase up into here, but instead I didn't. What I did was that I literally just sat and I waited for the consolidation. And how many times did it try and break down here? 1 time, 2 time, 3 time, 4 time, 5. So 5 times it tried to break down, okay? And, when it tries to break down so many times, you're going to have so many short sellers up here saying, oh, well, this is a lower high, so this is definitely it. This is definitely it. And that every single short seller has this kind of $3 line as their risk. Because as a long trader, I know that there's going to be short traders listening to this video. As a long trader, you need to also think like your enemy as well. And, I really don't have any enemies, but as a long trader, you really are playing against short sellers. So what I was thinking was that, okay, This stock has failed to break down so many times. And we know that if I'm a short seller and shorting into this consolidation, the minute this perks up, this was a relatively easy to borrow stock on the day as well, so just keep that in mind. But we know that if this perks up, you're going to have a lot of people stubborn thinking, well, I mean, this, like, as a short seller, your mindset is like, well, it's not the hot chick, so it's not possible to make this type of move. As a short seller, you're like, well, it's not doing that much volume. You're saying all these things in your head, why you shouldn't cover now, and why the stock's going to go lower. And when the stock started creeping up higher, and I actually bought it just because it just couldn't break down on this kind of consolidation. And when it starts to creep higher, you say to yourself, well, I can add a little bit more because there's no way it's going to go any lower. There's no way. And then it starts to creep up a little bit more, and I mean, you're down, as a short seller so much. And these are probably all shorts covering as well, and maybe some longs chasing too, causing this type of move. I know that this type of move is probably just longs chasing and shorts just getting their backs blown out. And, that was just kind of what happened, where the reason why I bought this dip was because I felt that we hadn't gotten enough volume to really say, okay, I felt that we were really still on the front side. I mean, I kind of wish that I had maybe sold up here, but I actually added to the position because I really felt that this type of move was coming, because it was such a creepy type of move where it kind of came up and we were doing some volume, but it wasn't like heavy volume. It wasn't like low float, up 300% at the open type of volume. It was just creepish volume. And this really just, I think, comes with more so experience, where it was just such creepy-ish volume. And as we got up here and you notice the volume starts to really kind of get involved, and it starts to really, and short sellers start covering and long traders start chasing, that's when I was just selling, saying, okay, this is a little bit ridiculous now. It's time to sell. And basically, my whole thought process of the move was just seeing that the stock just refused to break down. It refused for a while, and so I just kind of took some. Had of this not worked out, I would have just sold down here for a small loss, which is okay too. But yeah, this is what kind of happened over here. I was just kind of playing off this type of support channel area. Then I just started buying the dips, in this kind of 3.1 area, and I just started recycling here. I was like, okay, this seems pretty strong. Seems like it's going to uptrend. Again, most of my risks are like, 10 cents, so I would have just been risking under here. Just like here, I probably would have been just risking this area, and same here, I was almost risking a lot less. And then I actually had an appointment this day, or I had somewhere to go to, so I had to just sell out, and it's sad that I didn't keep going with this kind of trend, but I mean, oh well, it's okay. I did have something to do. I really forget. It's the 29th now. This is the 22nd. How fast the days fly by as a trader. So I just thought that I'd kind of point that out, that, as a long trader, you got to be thinking, like, who could potentially get trapped, or who is already trapped. Because here you see all these long traders who bought up here are now trapped. That is what makes it a good short. But it had kind of gotten oversold in this area. And in hindsight, I kind of wish I had bought this kind of first bounce. But I just had already gotten this front side of the move where I didn't really need this FOMO first bounce. So I was like, I'll just leave it. I'll just leave it. First bounces haven't been really great in this type of market, so I just kind of said to myself, all right, I'm just going to leave it. I already caught this massive front side. I don't need any more. I don't want to be greedy. I don't want to ruin my day and give back some of these gains. That's it. But then when I saw it was getting oversold and kind of having trouble again, breaking down, and in this kind of area, this kind of line area, I was like, okay, maybe we can go a little bit higher. And then it was doing that same consolidation action, couldn't break down. And you have to be wondering, as a short seller here, if you were short from up here, or maybe you're a weakness short seller, I don't know. But the good short sellers are short from up here. The bad short sellers are short from down here, praying for it to go lower. even as a good short seller, if you didn't cover and were hoping for an all-day fade, and it starts to grind up, you're starting to get worried if you're short from this area. And especially right here, maybe you're short from here saying, well, I missed this one, but it should go lower. You start to get stopped out. And I think this was really just a mixture of stubborn shorts and just kind of chaser longs buying this all the way up, and maybe some Robinhood traders involved too. I don't know. A lot of people have been asking me like, oh, how have the Robinhood traders affected your process? How have the Robinhood traders changed the way that you trade? And the truth is they really haven't at all. When people are trapped, people are trapped. When people are in control, people are in control. When longs are trapped, the stock is more likely to dump because there is excess supply. When shorts are trapped, it's more likely to go higher because every single short is covering, just like in this type of scenario. And when you find yourself in these type of scenarios where all the shorts are stuck, I think it's good to take profit along the way as well. The reason why I just added was because I really wanted to get a move like this where we got some good buying volume, some good buying pressure, and that's kind of what we got. And this is kind of that front side type of trade. It ended up being a nice one. A lot of people are going to DM me and say, how'd you know it was going to do this? How did you know? And the truth is, you don't. You just manage your risk, and that's kind of what happened with me. So this one, again, same type of pattern on SINT, where we get this, kind of strength. In hindsight, maybe I should have bought here, where we got that similar consolidation as we got here. These patterns are pretty identical. If you look at the strength, the consolidation, can't break down, can't break down, can't break down, you could take some at 1.8, risking 1.7. If it hits 1.7, your thesis is just invalidated, and that's it. You can just take a 10-cent loss. But here, I kind of just ended up taking some. I sold into the strength just because I felt that we were getting a lot of volume, and it just couldn't break the new high, so I just sold into it. And I wasn't done. I wasn't out. I just wanted to make sure that we were getting this type of action, and it just consolidated here for so long, and couldn't break down. So I took some, and then this ad again. I've been trying to focus on adding to winners a lot more, and this ad when I'm in the money. The reason being is because I know that short sellers are going to look to cover on a dip, and the minute the stock starts creeping up, it's just literal emotional short sellers. At this point, this again, because you have to think like a short seller, you have to think that these stocks aren't necessarily broken either. That's also a point that I want to make too. Is that these aren't necessarily broken stocks. These are stocks that just haven't gone down. They're not broken because they haven't been broken yet. I don't know. They're not really downtrending. They're not really uptrending. They're just stocks in no man's land that haven't really picked a direction, and that's something that I want to say as well. And that you're going to have people shorting in that one point. You're probably going to have people shorting all the way up. And the minute you get a new high a day, every short seller the good short sellers would just say, okay, I'm just going to stop out for a loss, just like the good long traders. They're just going to stop out and wait for the next opportunity. But I think we had a lot of people who, again, we get into these scenarios on these lower volume stocks where people don't want to cut because they feel that the stock needs to go lower. And once they kind of get trapped, and once we kind of start to go higher, they're forced to cover, and we get all these chaser longs as well. We get the Robinhoodlers, and boom, we get these nice moves like this. And this one, apparently, I felt that I didn't make enough because, you see me take this little bounce trade here. Usually I wouldn't do that. I think I just saw the opportunity and just took it. And then down here, we kind of got these. This is a good first bounce play, I think. This is also something I want to note. This is a good first bounce play because we get this extended move. kind of around the, I don't know, whatever. Let's say this is a 50% marking. Um, we have these kind of friends here. This is a good example of a first bounce. And I liked it a lot. And we got another bounce right here. This you could argue there's the first bounce here with the niche and without it. For me, I just like this kind of first bounce because we had the friends here as well. A lot of people have been getting a lot of messages about the first bounce, and really, it all comes down to do we have a clean move, clean overextended move like this? This is a clean overextended move. It's not a chop fest. This is a nice clean one. So if you want to look at first bounce, definitely backtest this one. Watch it on demand if you can. This was a nice one. And then this stock did end up grinding up higher to 2.6 as well. I just wasn't in it. I just said, yeah, probably backside. I'm taking my money and running. Same thing like we all always do. And something to think about on this slide, I just posted a couple lines. I was playing off this prior day because this prior day was the last time that the stock really had gapped up and made any type of move, so I thought it was kind of important to just include this as well. As we see, we have this kind of resistance, we have this kind of support into this was kind of like heavy volume area, and then obviously stock topped out here. This type of area we could argue, and then this little one I just put that in there just because it lines up with kind of like $2 type of area. But that being said, with this type of move, again, we have a lot of stubborn shorts, we have a lot of chaser longs moving the stock up. We get this consolidation, selling into strength always. We're not going to hold for the moon. We're not holding to $28 on the stock. We're just looking for this kind of up consolidation, showing us that it's not breaking down. The amount of patience that these type of trades take, it's really a patience trade of saying, okay, I'm going to let the stock show me that it doesn't want to break down. And if you're the type of guy who doesn't like the hot chick of the day, but you really want to get into longing, I think stocks like this can help you out a lot because, yes, they're not really the hot chick of the day yet, but you can just be patient and let the stock show you that it doesn't want to break down and that it wants to, trend higher. This does not mean that you're going to go and chase the stock. It means that you're going to let the stock sit for, maybe 3, 4, 5 minutes to show you, okay, I don't want it to break down, rather than just FOMOing in after the first minute of consolidation and being afraid that you're going to miss a move. Just be patient, chill. If you never knew about this pattern, you weren't going to trade it anyway, so you might as well just wait for it and be patient. And it's really in the patience for plays like this. Just really being very, very patient. And, I'm completely okay with missing a move like this. Had this have gone or had I had sold too early, that would have been it. And that's okay. And that's something that you just need to accept as a trader, is that I'm just going to wait and be patient and just know that patience is going to pay you. The problem is that if you have 10 plays and you get paid on one where you weren't patient, the next 10 plays around are not going to go as well. So it's just something to think about. Always be patient. That's really the moral of the story here. Just be patient. Wait for this type of pattern. And, obviously I just thought I would include some lines because we're over the pre-market high day, so we're going to need some more. And yeah, that's the end of the video. So thanks for watching, guys. I'm around anytime. You can always DM me. I try and get back to the DMs as much as much as I can and as fast as possible. We have kind of had a lot of newer members joining, which has created more demand for me. Obviously, I'm one of the only long primarily guys other than Austin, so I get a ton of DMs from long traders as well. But if you do have a question about shorting, we have a ton of shorting mods, so you can hit them up as well. I just thought that I would, mention that, I do get a ton of DMs from other long traders. So it is I do get a lot, but it is important to note that I clear them out, twice a day. So if I haven't gotten back to you in the morning around after zombie time or in the afternoon sometime, I will get to you by sometime that night. It's just kind of how my schedule, works out. I always try and get them as quick as possible, but I don't know why I just went on this rant about DMs. But anyway, thanks for watching, guys, and I'll talk to you guys later.